Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, we've had an action-packed week this week, not just with the market, but politically speaking, we've had a lot of volatility in Washington. I'm very surprised that the investors really didn't budge all that much by all the drama on the news. The good news, though, is that our forecasts were once again accurate, right on the money. And if you've been following along with the market guys each and every week, you'll see with your own eyes how effective these tools are with regard to forecasting the market. Now, we're looking at a candle chart here. This is a one-year candle chart of the diamonds, which is the Dow Jones Industrial Average ETF. And as I do each and every week, I've left my lines on the chart so you can see, again, the evidence of how accurate the forecasts are. Last week, I drew this diagonal line in this downward direction right there. And the end of that line, by the way, is my target number. So if you've been following along, you'll know that I draw the line. Sometimes the targets are hit early in the week. Sometimes they're not hit until the following week. But again, this is right on the money. In fact, yesterday, Thursday, the 27th, we closed very close. We hit that target on Wednesday, but we kind of stayed around that target right up until the close on Friday, which is the 28th as I record this. Now, what does that mean for next week? Well, if you look down at the bottom of the chart, you'll see the stochastics oscillator. And last week, I even said that the stochastics will most likely start to pivot lower. That's that diagonal line right there. And that's exactly what happened. But now if you look, you'll see that it's moving from a downward direction and starting to flatten out. So what I think we'll see for next week is the K line, which is really indicating the momentum of the market. The K line is going to most likely start to move up. And the reason I say that is because there's a couple of things going on the upper portion of the chart. Number one, this is a green candle that is engulfing the previous day's doji. So that's as close as you're going to get to a bullish engulfing pattern. And we saw that on fairly high positive volume. So now that we've had the forecast hit from last week, I'm going to draw this out just like this. And I'm going to say that we're most likely going to move up with the end of that line right there at 266.47 being my target for the diamonds. Now, if we look at the spiders, which is the S&P 500 ETF, same thing happened. We hit the target right on the money precisely. This diagonal line was the line that I drew from last Friday. Remember, Friday close was right here, and on that day, these candles did not exist. I just drew that diagonal line. I said we would hit the target, and look at that. We hit it precisely. Now we are at this blue line, which is the 20-period moving average, with another good, strong green candle on high volume with the stochastic starting to turn or flatten out. I think next week there, too, the S&P will start to move up, and therefore I'm going to draw my forecast just like that. With all the political action next week, I don't think we're going to storm up right away. In fact, investors may even sit on the sidelines Monday and Tuesday, and we'll have to see how they react through the rest of the week. But I think this will most likely work out to be a positive reaction overall. Now, the S&P is inversely related to the VIX, and I could say it this way. The VIX is inversely related to the S&P. The volatility index is a leading indicator, and I said that we would most likely move up throughout the week, and that's exactly what we saw happen. We came within pennies of my target there. However, what I think we could see next week, because this is inversely related, remember I already said that the S&P will most likely go higher. You can see that the stochastics here are starting to pivot lower on the VIX. That's telling us is downward momentum. So I think the VIX next week is going to move down right there to test this support level, and I'm going to extend that out. so you have a clear view of what that looks like. This is a support level that's been tested many times since June, and I think we're going to move right back down and then possibly bounce off of that support. While the VIX is going lower, the S&P will most likely rally, and everything seems to be following suit here. Now, with the Qs, QQQ, this is the Nasdaq market. We hit our target on Monday, right at the beginning of the week. I'll show you here. This is the line that I drew in a downward direction saying we'll most likely go lower. Came within pennies right here of that target, and then we bounced off of the support level. And that's interesting because the Qs seem to have reacted quite nicely towards the end of the week. But there's a couple things here that you have to pay attention to. The Qs are decreasing in volume as the market is going higher. You see that? So I'm going to erase this line, and I'm going to tell you that next week I think the Qs could actually drop at the beginning of the week and then rally towards the end of the week. So it's going to look like a pivot point there. I don't do this too often where I'm forecasting the down moves and the up moves, but when I have done this, it's worked out precisely as I said it would. And although there's no guarantees that this is going to be 100% accurate, the odds are definitely in our favor because you can see that the Qs are still showing upward momentum on the stochastics, and I think that will continue on into next week. Now, the Russell 2000 did not move. It's the only one that did not follow my forecast line. But the good news is I think next week it's going to hit my target. You see, this is a very well-pronounced bullish engulfing pattern. It's when you have a big green candle engulfing the previous red body. And my target was back here. So I'm going to move this over, just like this. I'm going to delete this line. I'll delete that little hash mark there. And I believe that the Russell 2000 is going to rally quite nicely next week. You can see that the stochastic is still very oversold right there. That is giving us a reading right around 990. Anything below 20 is considered oversold. And then once this blue line here, this K line starts moving up, it'll most likely cross with the red line, creating a buy signal. So the Russell 2000 looks a lot more bullish than the other markets I've mentioned, but that doesn't mean that you should go all in and take extremely aggressive long positions. I think if you're going to be a trader, you could put your stop somewhere below this roll reversal support level right here. And if we start to see closing prices below that horizontal line, it might be your time to move to cash and protect against any kind of a downward move at that point. If you'd like to learn more about what we do here at The Market Guys, just go to themarketguys.com, click on the video tab right there, and it'll bring you to our video library where we have what we call market shots. These are very short videos that will give you an idea of the strategies and some of the terminology that I use. Look at trading the gap. You might want to look at this roll reversal right here, and then also pay very close attention to the bullish engulfing patterns. I have quite a number of videos here, but the engulfing patterns right here are what I mentioned in today's report, and I think they'll be a good refresher for you. So have a great weekend, and I will speak with you next week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.